Hello and welcome to this presentation. My name is Andre Vojnia and I work at Han ETF. As you can tell from my background probably, today's topic will be cryptocurrencies and Bitcoin more specifically. Now, as many of you might have noticed, over the last 6 to 9 months, cryptocurrencies have seen a strong price appreciation. So after the initial surge in 2017, when cryptocurrencies appeared for the first time on professional investors' radar, now 3 years later, we've seen a second kind of boom, and going along with the strong rise in performance, there's been a strong spike in interest from the professional community in this asset class. So today I would like to discuss 3 questions. The first is why does Bitcoin have value and where does this value come from? Secondly, how does Bitcoin and other cryptocurrencies fit into the portfolio context of a traditional portfolio? And thirdly, how to best access cryptocurrencies and asset class from the viewpoint of a professional investor. So with that, I will straight dive into my slide set and guide you through these topics. And I will start with the third question, actually, how to access Bitcoin from a professional investor standpoint. And I will return to this question at the end of the presentation again. Okay, so you should all see the slide deck now. So this is where I usually like to start the presentation when I speak about cryptocurrencies and Bitcoin with these 2 gentlemen. Now, these 2 individuals probably lost money trading, or not probably, surely lost money while trading cryptocurrencies back in the years between 2008 and 2011, when Mt. Gox was operating as the preeminent crypto exchange in the world. It was Mt. Gox was a crypto exchange based in Tokyo. It was one of the very first of its kind, and it accumulated over 70% of cryptocurrency flows and trading volumes on its platform at its peak. Now, that platform also went down in quite spectacular fashion due to several factors, including hacking, including fraud allegations, lost money, hundreds of millions at that time. In dollar terms were lost, and even though some of it was recovered, the platform itself never recovered from that, and many private individuals lost quite a lot of money during that scandal. So what we want to highlight with this slide is that trading cryptocurrencies and accessing cryptocurrencies is not an easy feature. The reason is they are mostly unregulated. Apologies, 1 slide back. These cryptocurrencies come from an unregulated space originally. So Mt. Gox, just to give you some background, the original function and the name comes from Magic the Gathering. So the original intention of this platform, which was by its founder, was to trade magic cards. Magic cards, as some of you may know, are these tradable card decks. It's a card game that you can play. Now, that individual, before he finalized his plans for the platform, noticed that there was a new game, if you so want, in town called Bitcoin. And he said, well, instead of trading cards, why don't I trade this virtual currency called Bitcoin? And that's what he did. And he started trading Bitcoin and other cryptocurrencies. And that was how basically one of the biggest cryptocurrency exchanges came to be. That shows you how unregulated a space cryptocurrencies was and still is until today. Traditional finance has started to get their head around cryptocurrencies, and certain regulations are coming up in governments, and financial fiscal authorities are starting to integrate them into traditional finance concepts, but even today we're still not fully there. And when you trade Bitcoin, Ethereum, or whichever coin you like on, let's say, Binance, for example, the biggest current exchange by volumes, you still trade on a venue that is not regulated by traditional finance or by traditional regulators, like the FCA in the UK or the FINMA in Switzerland or the BaFin in Germany, for example. So you're operating in a almost separate world, which has its own rules and it has its own kind of internal regulation, but it does not have the traditional protection mechanism. And that is one of the big drawdowns for professional investors. So what we said at Han ETF last year when we partnered with a product partner, we said, what if we could solve these issues? Namely, the main three issues that we see for professional investors. The access is fairly complicated. You need to be technically well-versed with computer software and understand at least a minimum amount about how cryptocurrencies work, how to store your keys, the so-called private keys that you need to keep your cryptocurrency safe, how to operate wallet technology. So that's all a fairly sophisticated process. The next barrier is that it is unregulated. I already touched on that. If you are, for example, a investment fund manager, you cannot simply buy cryptocurrencies into your fund. You're probably prohibited by your own investment guidelines, but also by wider regulations like the usage regulation, for example. And liquidity also used to be a problem. This has admittedly been mitigated over recent times simply because cryptocurrencies have become quite big these days, and liquidity is probably sufficient also on the cryptocurrency exchanges. But just a few years ago, liquidity was very fragmented, and depending on where you traded, you had to be careful to choose the right venue, maybe at the right time, if you wanted to execute larger transactions to trade your coins. And that is particularly important for larger professional clients who might trade larger sizes. So our proposition was, what if we can solve all these and make Bitcoin tradable like a stock or like an ETF on exchange? So that's what we achieved. We launched a so-called Bitcoin ETP, an exchange-traded product. And this product was the very first one actually to trade on Deutsche Börse with central counterparty clearing. Deutsche Börse is a reputable exchange, one of the largest exchanges in Europe. By ETF volumes, it was the largest exchange in the past. So clients can be assured of liquidity and the kind of safety of that product on that platform. It has been approved by the German regulator BaFin. So the product structure has been vetted by a reputable regulator. You can be assured of professional liquidity. As I mentioned, the fact that it trades on Deutsche Börse already hints to that. But in addition to that, we can illustrate that by showing that we have 4 or 5 different liquidity providers in the structure, which offer independent liquidity to investors. It is 100% physically backed with the respective cryptocurrency, in this case, Bitcoin. And the ETP structure that is applied is a very tried and tested structure that has existed for 17 or 18 odd years now in the market. So that was our proposition, how we came to market. That proposition was very well accepted, and I'll come to that at the end of the presentation again. But having established where we come from and what our value proposition is to investors, I would first like to tackle the other 2 questions. Why does Bitcoin have value? And how does it fit into the portfolio context? So for that, the first question, why does it have value and where does it derive this value from? Bitcoin is being seen as one of 2 things most of the time, at least, either currency or a store of value, like gold, for example. Looking at the currency characteristics, you can take a number of different parameters to establish whether a asset is a viable currency or not. I've listed here 4 of the main characteristics that you normally look at to establish that. Starting with scarcity, is Bitcoin scarce? Yes, it is. There are 21 million Bitcoin that can exist in total at any point in the future. That is written into its algorithm and will remain unchanged. There's no single institution or entity or individual who can change that design. So scarcity is given, so we can check that box. Divisibility, a currency needs to be divisible in small increments to be usable in daily life. Now, some of you might think, well, 21 million Bitcoin doesn't sound very much if you want to buy a chocolate bar, for example, at your convenience store next door. Luckily, you can divide Bitcoin into 8 decimal places, into so-called satoshis. So this will solve the problem of divisibility, even if the Bitcoin price should rise even further from today's levels of around 60,000. There should be plenty of room to divide Bitcoin into smaller increments to be able to pay in daily life. Transferability, yes, that is given as well. Bitcoin is probably more so transferable than the dollar or the euro in a sense that it is a really global currency. You can be based in Japan, in London, in Zurich, in New York. It doesn't matter where you are in South America. You can send Bitcoin to your brother, to your friend, to your family instantly from your computer. All that you need is a wallet. The person who receives the cryptocurrency from you needs equally to have a wallet, and you need internet access. If you have these, you can transfer cryptocurrencies, and Bitcoin in this case, very fast. To validate a Bitcoin transaction takes roughly 10 minutes normally, give or take, and the Bitcoin will arrive at your destination. This is much faster than a traditional cross-border transaction in dollar or euro, which can take 1-2 days, or depending on the currency, maybe even longer, and incur often high costs of transaction, which here you don't have. So these 3 points are all given. Now the utility is one that is debatable sometimes. It is something that is growing, and Bitcoin can already be used in with certain providers to buy goods and services. For example, Microsoft used to offer it in their, or maybe still offer it in their online shop to buy certain goods from them. You were able at Expedia to book your travel with Bitcoin, or you can buy a Lamborghini with your Bitcoin. Now, admittedly, buying a Lamborghini is not something that you do every day. So Bitcoin is not yet there at 100% utility, meaning you cannot yet go to the supermarket and pay with Bitcoin and buy your groceries, for example, or pay your rent with Bitcoin. It's still a way, probably a long way to go until then. So utility is certainly that one factor that still needs the most development, but it is growing rapidly. And we see almost on a daily basis, certainly on a weekly, monthly basis, more and more companies coming out and starting to accept certain types of cryptocurrencies as a legal tender. So that problem should be solved in the future, assuming that Bitcoin will indeed get adopted more and more by users. Here, one more table to compare Bitcoin not just to dollar, but also to gold. As I mentioned, some people like to compare it to gold as a store of value. One other factor that I have not mentioned yet is the decentralized aspect of Bitcoin. That is one of the big advantages that proponents of Bitcoin like to flag. There's no single entity compared to, let's say, the euro or the dollar, where you have a central bank which can take unilateral decisions about whether they want to issue more or less of that currency. You do not have that in the Bitcoin space. So since the financial crisis in 2008, this was one of the main criticisms which was raised against traditional fiat currencies, that they have been inflated artificially by central banks to suit their needs and purposes. And this led to certain problems in the economy, and some people would argue that inequality in society goes back to these factors, the bailouts of banks and others, and hence you saw this certain movement towards Bitcoin, and Bitcoin was actually issued in 2008 in the wake of this financial crisis by its inventor Satoshi Nakamoto, who said that the existing system is broken, fiat money does not work, and we need a new system in the modern world. And now that we have the internet and the digital world, why not create this new rules-based currency called Bitcoin, which has a clear algorithm behind it, and which cannot be changed by any single person, but instead you have a consensus mechanism. The only way to change aspects of Bitcoin is by gaining a 50% plus majority of users and to convince them that your changes are useful to the community and have them go along with them. Otherwise, nobody can make changes. And that is a very strong argument for the independence and decentralization of Bitcoin. So these are the fundamental aspects, answering the question, where does it derive its value from? Proponents of Bitcoin, as I said, see it as the strong, decentralized global currency that can easily be transacted without being manipulated. Now, moving on to the second question and final question that we have not yet answered is, how does Bitcoin fit into traditional portfolio context? We start with a classic return and risk analysis, starting from the top left. Here we compare Bitcoin with some traditional assets such as gold, emerging market equities, developed market equities, and also commodities in the form of crude oil and bonds. Now, in terms of returns, I think this is fairly self-explanatory. Bitcoin has had some very strong years in the last 5 years, 4,200% over a 5-year period is huge. Obviously, this was the main motivation why quite a few investors went into that space, into this asset class and allocated, because they were hoping and believing in the price rise of Bitcoin. Volatility is maybe the slightly more interesting aspect for professional investors, because too much risk in a portfolio is something that is normally unwanted. So many opponents of Bitcoin point to this metric and say, look at these numbers, double digits, close to triple digits back in 2017 at 88%. This is not sustainable in my portfolio. I cannot take that risk. Therefore, I do not invest in Bitcoin. Now, I will come to volatility as a dedicated aspect on the next slide. But what you already can see here is that volatility has been slightly decreasing since 2017. It came down from 88% to roughly 67%. Admittedly, this is still a very high value, but the trend line has been going down. I'd like to take a quick look at the Sharpe ratio before moving close into more depth on volatility, namely looking at the 5-year average and the values over the last few years. Now, if you look at 2017, one could rightly say that a Sharpe ratio of 15 is not repeatable. That's not something that you'll see again. It's a blip. It's a outlier. Why would we invest in something that went so crazy in 1 year, it must correct the next year? Well, it did actually correct 2018. Indeed, it was probably overhyped a bit in 2017. But then over the next few years, it made up those gains. And if you look at the 5-year average of returns versus volatility, that value is actually not that crazy. 1.6 is a very kind of normal, just good and strong, but not crazy strong value for the Sharpe ratio. So the question, can this be sustained going forward? Well, certainly there's a high value, but it's not something that seems impossible to sustain in the longer term. Looking at other asset classes, they are not far behind. They're all slightly below 1. But I would say the Sharpe ratio puts these extreme returns and also extreme volatilities a little bit in perspective and shows you a slightly more adjusted picture. Touching on volatility again that I mentioned before, in dark blue here, you see the Bitcoin volatility over the last 5 years. And we are using 1-year rolling volatilities here. What you can see is, yes, volatility spiked in 2017 when Bitcoin and other cryptocurrencies had the first big rise in performance that was visible to professional investors. There were spikes in the past before that. From then on, it came down somewhat. Yes, it had a low in 2018 and then it rose slightly again, but overall the trend is going down. Interestingly, also in March 2020, last year, when Corona struck, all traditional asset classes had a quite considerable spike in volatility, whereas Bitcoin reacted fairly moderately to that relative to its already high volatility. It did not suddenly double in volatility, whereas most asset classes did more or less double in their traditional vol metric. And then afterwards, you can actually see that Bitcoin, again, within a few months of that initial shock, the volatility started to come down again. And here you can also see that it exceeded the volatility of crude oil. Sorry, crude oil exceeded the volatility of Bitcoin for a few months during Corona. So if you think that crude oil has been an established part of the traditional investment space, of course, coming from an alternative view, not everyone invests in oil, but there are considerable professional investors who do invest in oil and at least consider it to be an eligible investment for their portfolio, then I think the argument against Bitcoin being not eligible for traditional portfolios because it's too volatile does not hold anymore. Because you can see crude oil can spike and can be as volatile as Bitcoin or even more. And also before in 2016, when Bitcoin volatility was somewhat lower, it crossed paths with oil in the past as well. So it's the second time that these volatilities overlap. If you can invest in oil, I'm sure you can invest in Bitcoin, taking into account, of course, this volatility and making an appropriate allocation. So the pure volatility argument, I think, is not enough to say, I do not touch Bitcoin. The final aspect on volatility, what we did here is in dark blue, we tracked the upside volatility of Bitcoin, and in yellow, we tracked the downside volatility. We wanted to split this up because what you want as an investor is you want the good type of volatility, which is the upside vol. It's the volatility when prices go up. What you don't want is high downside volatility, because that means your prices drop fast. Now, if your prices rise faster than when they fall, that's on average a good indication. That's an asset that you might want to have because you have, on average, more positive surprises and not just more, but stronger positive surprises than the downside surprises. If you look at the same metrics for traditional assets like developed market equities or emerging market equities, you often actually see a slightly reverse pattern that you have drawdowns when prices drop, they drop faster than when they afterwards rise again, where the rise is more gradual and the correction is often more spiky and pronounced. So in that sense, yes, Bitcoin is volatile, but actually what you got in the past was often good volatility and it benefited you, which might seem obvious given the strong price rises. Now, that has narrowed somewhat in the last few months of 2020. We have to see how this will behave in the future, whether we still continue to see this pattern or not. But at least in the past, again, this chart puts the past high volatility of Bitcoin into perspective and shows the good character of that. Finally, in a portfolio context, correlations are important because you might have high returns, high volatility, but you want to understand how does the asset correlate with your other assets in your portfolio. And the good news is that Bitcoin is very uncorrelated. Again, we look at 1 year rolling correlations here to take a bit of a wider time frame, and we let it roll over time in the chart at the bottom. At the top, we actually take the full 5 year horizon and calculate the correlation over that time frame. So we can see in the very long run, correlations are close to zero to most traditional asset classes. Also on the 1 year rolling correlation, it holds up fairly well with most asset classes, somewhere between minus 0.2 and plus 0.2, 0.3. There was a slight increase during Corona, as it is when things go down massively like they did in March last year. Everything tends to be correlated. People just sell everything and go back into cash. So also Bitcoin had a spike in correlations with other asset classes. It sold off on the day and in a few days back in March 2020. But it still stayed within reasonable means of slightly below 0.5 to all asset classes in this comparison. And you can't see it in this data, but when you look at 2021 data, the correlations already start to come down again and go back to previous levels, lower levels around 0.2 to most asset classes. So it is Bitcoin seems to be, at the moment at least, a good diversifier in the portfolio. So that concludes our overview of how Bitcoin fits into the portfolio context. I hope we could establish that it does have, in our opinion, a place there, be it as a diversifier or as an add-on and performance booster. Obviously, the allocations might be more moderate than you would do with other asset classes. That depends on each investor's risk appetite. Now, I'd like to finish off with the third question that I already started at the beginning when we said the reason we're here today is because Han ETF launched a Bitcoin ETP in June 2020 because we believe in this asset class. And I'd just like to touch on one or two of the aspects of that ETP and why we believe it has been a success since then. Here are the three key points. Again, just highlighted that it is a regulated vehicle that has been regulated by the BaFin in Germany, the regulator there. Investors can be sure that it has been vetted by a regulated authority. And it comes in a vehicle with an ISIN that trades on traditional exchanges. It's easy to access. It can be bought into a UCITS fund, for example. This has been one of the latest use cases, actually, that we discussed with many investors. We had fund managers who came to us and who manage multi-asset portfolios, and they said, I would like to take a small allocation to cryptocurrencies, but I cannot do it directly. I need a vehicle that is eligible to be invested by a UCITS fund. In this case, the ETC structure is eligible. It is considered to be a transferable security under UCITS rules, and hence can be invested. If you wish to know more about that, we can share an analysis from our team with you that gives you more detail on that. Please get in touch if you are interested. It is 100% physically backed. So for those investors who actually would like to take physical delivery or simply want to have the safety that what's written on the tin is also in the product, that is the case. We store for every unit of the product that gets issued, we have the equivalent amount of cryptocurrencies stored with our custodian in safe custody. It is held in cold storage with multi-signature. Multi-signature simply means you need several people to sign off a transaction before it can go in and out. So a lot of layers of security are in that structure, in this product, to really give you what we like to call institutional grade safety within this product. The product has reached $1.4 billion at its peak about a week ago. So it's been very well accepted by the market. It's been the fastest growing actually Bitcoin ETP in the market. Liquidity has been very strong. For the second month in a row in March, our Bitcoin ETP has managed to be the most traded ETP on the Xetra platform of Deutsche Börse. Xetra is the electronic trading system of Deutsche Börse, where all the ETFs and all the ETPs trade. It's been, as I said, the most traded amongst all ETFs, MSCI World, DAX, you name it, which I'm not just patting ourselves on the back here. I think it's an astonishing feat that investors seem to trade this product really a lot. Like the turnover has been in the region of 800 to 900 millions within a month. Very high values. And it shows that the structure did what it was supposed to do, namely provide liquidity in this new asset class to investors. And I'd like to highlight that as a last point before I finish off. We work together with 5 dedicated liquidity providers who make markets in the primary market and in the secondary market on Deutsche Börse. Specifically in the secondary market, 3 of these market makers are active. So you get a very competitive field of liquidity providers who are fighting to offer you the best price and best execution, which is good for investors because it makes the bid-ask spreads for you more efficient and ensures that there's enough liquidity, whether it's large or small trades. And you can see that here, that this is a screenshot from Deutsche Börse intraday recently on 1st of April, where the product traded, and you can see marked in yellow there, the spread on the left-hand side was 4 bips at that time, which equates to 0.08%. So 8 basis points, relatively speaking, between bid and ask is a very tight spread. It's really one of the tightest you can find probably in the ETP space, and you get that for a varying amount of volume. We've had trades in the multi-million and many trades in the retail side of several thousands. All of them can be executed efficiently. On the right-hand side, you can see that the product trades not just on Xetra, the main exchange, the main trading book of Deutsche Börse, but also on many of the regional exchanges, many of the trading platforms in Germany like Tradegate, Qualtrics, Getex, the regional exchanges, Munich, Stuttgart, Berlin, and so on. And we also have a listing on SIX Exchange, and you can see that on that day, for example, you had trading volumes across almost all exchanges at that point in time. And here, finally, as a last indication, this is these are the trading volumes, the historic trading volumes on Xetra, on the trading venue of Deutsche Börse. You can see I took the snapshot from February because February was a very active month for cryptos, and it also had it was the record month for us, a record trading day on the 22nd of Feb, with 124 million euros traded in a single day on exchange, so not on the OTC market, but really executed on the exchange venue. Very high amount, and it all traded smoothly. There was no hiccups. It did what we expected and hoped that it would do, namely provide a tool for investors to express their views, long buying, selling in desired quantities. And you can see also the other days, the volumes remain very high. On average day, we normally have anywhere between 15, 20 million, up to 50, 60 million of trading volumes, with the occasional outliers, as I said, going in the 100 million plus region. So with that, I'll finish off. I hope I was able to give you an interesting overview into how a Bitcoin ETP works. You can see here on this last slide, again, a summary of all the aspects of the ETP structure, why we believe it's so robust. Maybe just a last point for those of you wondering, is there issuer risk or not in this ETP? No, there's no issuer risk. This type of ETP structure has been copied from the gold space, from gold ETCs. We just switched gold for Bitcoin or other cryptocurrencies, and which is backing these ETCs. The key here is that it is a trustee structure, meaning that there's an independent trustee in this ETC. So if anything were to happen to ourselves, at HanETF, who is the distribution partner for the product, or our partner who built the actual structure, then that money, the investor money, is not lost or does not go into the bankruptcy mass of our companies. The vehicle is completely bankruptcy remote, so the assets remain untouched, and the trustee would step in and say, okay, the initial product provider does not exist anymore. Either they find someone else to take over the product and keep it going. If not, there are clear rules within the prospectus that state the trustee will wind down the structure, they will sell the Bitcoin or whichever cryptocurrency there is, and pay out the proceeds to investors. Or you alternatively have the option to get your proceeds in actual cryptocurrency. All you need for that is a wallet, and you communicate your wallet to the trustee, and you will get your cryptocurrencies paid out. So it's a really, I think it's as safe as it can get in the ETP space. We've put in all the known safety mechanisms for investors, which, hopefully makes it a viable and very interesting solution for professional investors looking for exposure to that space. I haven't told you yet who HanETF actually is. As a final word, HanETF is Europe's first multi-manager ETF platform. We are also a white label platform, which means that the ideas behind our products do not come from us, from our own team, from ourselves, but they've been developed by partners. And these partners are basically wealth managers around the world who approach us and say, hey, I'm doing something very well. I'm good at investing in Bitcoin, for example, or in traditional equities, you name it. And I would like to realize my idea as a ETF or an ETP in Europe, but I don't have the capabilities in-house. Can you help me with that? That's when HANETF comes in. We have a ETF issuance platform in Ireland. We have a ETC platform for commodities. We've partnered, in this case here, with a partner and their ETP platform for cryptocurrencies. So we are able then to implement your idea, launch it, bring it to market together with you, accompany you along this product development process and product launch process, maintain the product for you, and then also distribute the product. Here on the last page, if you're interested to learn more about us and who we are, we have a range of other products as well from some very interesting partners around the world. Thank you for your attention today. As I said, I hope it was interesting. If you'd like to learn more about any of the aspects that we discussed today, get in touch. You can visit our webpage, www.hanetf.com, or contact us at info@hanetf.com. My name is Andre Vojna. As I said, you can also find my email address. It's andre.vojna, VOINEA, @hanetf.com. Feel free to get in touch, and good luck with your investments. Thank you.